If you want to trade the 1, 5, or 15 minute chart and you want to be in a trade for 30 minutes or less while making hundreds, if not thousands of dollars in the process, then you will need to understand a concept called Power of 3. We're going to start with a conceptual understanding, but move quickly into real world examples that you can begin using right away. I want to invite you to join me as I live stream Trading the NASDAQ every morning beginning at 9:20 Eastern Standard Time, where we talk about all of these concepts and much more. Take a look at the screen here and you will see this illustration of AMD. Right here we have what's called accumulation, where price moves very tightly up and down, not moving or breaking any major highs or lows. Then the next stage is manipulation. This is when we get a big expansion move higher, but it's short-lived. It then begins to move the other direction, moving into what's called the distribution phase, where we get our biggest move and where most smart money and traders make their money. Now, the reason we call this manipulation is because it acts as if it wants to move higher, making everybody think price is going to move in this direction, but then quickly and aggressively moves the opposite direction, causing a lot of people to either miss this trade or be stopped out because they thought they were going long. Now, if you take a look at the accumulation, manipulation, and distribution in the form of a traditional candle, where we have an open and a close, or a bearish day, we have an opening price, a high, a low, and a close. Now, what's interesting is how similar the AMD or Power of 3 looks to the opening, the high, the low, and close of a particular candle. Typically around the open price, you will get a stage of accumulation. Then you'll have price move to make a high, where we get our manipulation, then our expansion lower to a said low, and then it retraces to a close. The same goes for a green day, where you have an opening price here, it moves lower first, then it has an expansion to a particular high, and then it retraces down to a close. Now, when we are looking for our best longs and our best shorts, we are looking for our best shorts to take place above the opening price of a particular session. We'll go into those details shortly. And if we're looking for a long, our best longs are going to be below the opening price of a particular session. Now, conceptually, this is very easy to understand, but practically, how do we use this in a real market? How do we know when to go short above opening price or long when price is below without it running our stops? For us to understand this, we're going to look at the past week and use the following process on each day. As we take a look at Monday's price action, we're going to be breaking down the 5 steps that you need to look for when you want to use Power of 3 in finding a setup to get your big moves within 30 minutes. Step 1 is we want to identify the previous day low, the previous day high, as well as the London low and the London high. Step 2 is going to be to annotate our midnight open, our 9:30 open, as well as the noon price. And you can see that we have those selected here. Right here is going to be our opening range gap, which I'll make a complete another video where I explain this in detail and how I use this for many of my entries. I'll link that video here. Step 3 is going to be waiting for price to sweep the previous day high or low, the London high or low, and we want this ideally to happen in the New York session. Whether it's the AM or the PM, we want it to happen during that time frame. It can happen in the pre-market, as we'll see in an example, but ideally and preferably we want it to happen in the New York trading session. Step number 4 is going to be to identify your model to either go short or long, and then you want to target the opposing side of liquidity. That means if you're going short, you're going to want to look for a short target like a swing low or an imbalance, a key level on the lower side of the chart. And step number 5 is going to be to identify a take profit, which is ideally typically in the same session or the next session. So let's put this together within the Monday's price action and see what we can find. As we take a closer look at Monday's price action, we can immediately see our accumulation stage as we showed in our outline. We then get a manipulation higher, which runs the London highs as well as the previous day highs. This gives us our indication that we can begin to look for a short. This is where we would find our short, somewhere around our 9:30 opening price or after. So 9:30 open happened right here. If we drop down into the 1 minute, I could show you the actual trade setup for you to take, but we're going to do that for Friday's trading session here shortly. As you can see, we see our expansion. Where do we target? We could target the London low. We could have also targeted these equal lows sitting way down here, and that is and would have been a fantastic target to actually take your profit. So here's Tuesday's price action. The first thing we want to do is identify our highs and lows, as well as our London high and our London low. We then mark midnight open, which is noted by this dashing line. We have our 9:30 open, and then our noon session. Typically for the noon session, we're not going to put much emphasis on that, as you can do the accumulation, manipulation, and distribution all within the lunch hour if it's not in a consolidation trend. The first thing we want to have happen is after 9:30, ideally we want price to run a high or low. As we zoom in, we can see that price before 9:30 already ran our previous day low. But what do we want to have happen? After 9:30, we want that low to be ran again. Now that we've ran this low, we now have permission to begin to look for a long setup that will give us the biggest move of the day. We see price move back up after grabbing the previous day low. It moves higher, and what do we have to do? We have to identify our potential take profit. Where does price want to move to? The London highs are sitting right here, and it takes it beautifully. So if we were to look at the entirety of the day, you could take from the midnight open our accumulation first, our manipulation lower, and then what do we get after manipulation? We get distribution to a key level, and then it consolidates into the close. Now, the hardest thing for traders to get past is this up and down. Well, Tyler, why was this the manipulation and not this? Because it's about time and price. And this is where you by far get the biggest moves. You see this manipulation lower, and then after 9:30, guess what you get again? Another manipulation lower into what? Our key level, the previous day low, a huge level to make sure you always have on your charts. It moves into the previous day low, and then boom, explodes higher to the London highs, and then does its thing for the rest of the afternoon. On a midnight time perspective, we see our accumulation, our manipulation into the previous day high, well into the early mornings of Wednesday. Now, obviously, we see price hit our previous day high in the early mornings and also makes our London high. So how do we use this information to identify when we can go short? If we're waiting for the manipulation to happen, but we already hit the high and we're down here, how do we work with it? Well, first, we need to identify our 9:30 open. So here's our 9:30 open. What do we have sitting right here? We have our midnight open. We have our opening range gap, which we'll do another video on. And right at 9:30, this is the 9:30 candle. Look what it does. It wicks and covers completely this opening range gap, then drops back down. Now look how price sits beneath the 9:30 candle for about an hour and a half. This is telling us price is really heavy. This is telling us, hey, we may have already had our big manipulation move. If that's the case, we're looking for an opportunity to go short, which we'll do a whole other video where I break down Monday, Tuesday, Wednesday, Thursday, and Friday for entries using the power of 3 on the 1 minute chart. I'll link that video right here if you want to check that out. So what can we expect? Because price is really heavy, we hit price, the previous day high, way up here, and obviously we wicked this, covered a very big draw on liquidity very quickly, and then moved back down immediately. It tells us we're heavy, meaning we can begin to look for our entry after the 9:30 around here, targeting a swing low or a previous day low. And here's our previous day low right here, and we hit that previous day low with pizzazz, a big nice drop into the previous day low, and then it continues lower and lower throughout the day. So here we have Friday's trading, and when we begin our analysis on identifying our previous day high and low, you're going to see a low way down here. When you have price really high above a low, there's a good chance that this might not be in the cards as far as a trade setup. So you have to go to plan B. Could it be the London low or London high or the previous day high? We need to identify where our midnight open is and where our 9:30 opening price is. There is two opportunities for a trade here. We have our 9:30 manipulation higher with a distribution lower to what? A key level. Why is this key compared to the previous day? Well, if we look left to the previous day trading, this is a low from the previous day trading. And what does it do? It runs this level, grabbing the liquidity sitting underneath here, and then boom, it explodes higher like a beast, running the previous day high. It will not always be a previous day low, a previous day high, or a London low or high. It could be just a very strong swing low or a very strong swing high other than the previous day low or high. So as we see here, price is accumulating right here, and then it runs lower, and then we have the opening price at 9:30 at this candle. And what does it do? It runs higher into what? Our London high. We at this point are now waiting for an opportunity for price to show us our model to get short and begin to run lower down to this sell side liquidity. So here's our accumulation, our manipulation, our distribution. We also can use this as a trade opportunity as well. Here's our accumulation, here's our manipulation, and here's our distribution from this sell side liquidity right here. After what? After the noon session, we move lower, we move higher, and we have this big move to the upside. So here's our executions for our AM trade right here. We have a fair value gap that acts as an inversion fair value gap, which I'll link a video right here that talks all about inversion fair value gaps. And then we also have our breaker model right here, where price runs lower and runs into our breaker. This is the first time this clearly shows up in price action compared to the opening price. We don't get a lot of beautiful price action. It's actually really choppy. It's really nasty. And this is the very first time we see nice and clear price action. That is a signature in price. So when we're looking at the accumulation, the power of 3, we want to buy where? Above the opening price, giving you a huge move lower that if you have the balls to hold, you're going to make some money. At this point, we're now waiting for our next opportunity. We have a beautiful move, which actually looks better on the 15-minute than it does on the 1-minute. But right here, we have a big move lower, and then we're waiting for what's called a 15-minute change in state of delivery. We get that right here. Then we go into some consolidation, which we're waiting for price to meet with time, and guess when it does it? Look how clearer this bit of price action is compared to all of this right here. You have a nice big fair value gap, which is then closed higher and closed aggressively. And then what do we have? Again, a breaker. A low, high, lower low with an aggressive push higher after we already had a 15-minute change in state of delivery. Boom, go long here and look at the run higher into the close. Now, as I said before, if you would like to know about the opening range gap, make sure to click right here on the next video where we go into detail on how you can benefit from and how to use and identify the opening range gap. We'll see you in the next video. Take care.